to serve you. I want to basically conclude by saying that we are throwing this back to you to tell us what we should do. If you are giving us the endorsement, we agree. If you want us to go through an election, that is the wish of the whole team. Finally, fellow members and distinguished colleagues, I want to thank you immensely for trusting us with your Commonwealth. The opportunity you have given us to serve you is eternally appreciated. Let me be clear. The experience of managing Mutual, the experience of interfacing with customers, the experience of seeing an asset entrusted into your hands grow is an experience that is worth gathering. We're extremely grateful for that. On behalf of myself, my colleagues, we remain truly yours, and we are committed to our common goal of building wealth for ourselves and for making sure that we all remain each other's keeper. Thank you very much.
We are going to see the financial performance for the year ended 31st December 2016. It is, the President has given us an excerpt from this financial statement, and from there we have been told of so many other things that you need to know about the statement. I will only go on to pinpoint those areas that he has not highlighted and give you the basis of our opinion. In the statement of financial performance on page 13 of the audited account, you will be seeing your income there. Income is the first item you will see on the statement of your financial performance for the year ended 31st December 2016. Your interest income, which is made up of, if you go to your note 11, your interest income, which is made up of your earned interest on loan, earned interest on asset finance scheme, interest earned on fixed deposit, that is the fixed deposit you have with your bank in Cotonou, interest earned on fixed deposit, which you have with your bank in Nigeria, and the income from other investments. We will be having a total of 419,820,547 CFAs. And having considered that, you have another source of income, which is the registration fee from new members. The registration fee from new member in the year stood at 1,880,000. That is 1.8 million CFAs. That makes up your income for the year, which gives a total of 421,700,547. This is what you have on page 13 as your interest income. So, having considered your interest income, you will have to know the expenses you incurred to earn that income. The interest expense incurred by the union was 208,403 CFAs. And when you deduct this from the interest income earned during the period, you will have a net interest income of 419,612,144. before adding the registration fee, which you got from members, to get the total income of 491,492,144, which you have recorded for the period. Having done that, the union also had some expenses incurred for their operation during the period. Expenses such as administrative expenses, the fee they pay to the auditors, that is to us, for auditing this your account, and as the usual norm recommended in the financial standard, we had to make provisions for the depreciation of your fixed assets. This as well was taken into consideration. And in the course of the year, a total operating expenses of 38,617,280 CFAs was incurred. Having known what came to you and what you spent during the year, you should be able to know whether you have surplus or you have incurred more expenses more than what you earned in the period. So when we look at that, a surplus was recorded during the period, and that surplus stood at 382,874,864 CFAs. So, having arrived at this surplus, we went further to look at the criteria put in place for the appropriation of your surplus for the year. From the management account presented to us and all the supporting documents we were able to see during the course of our audit, we looked into the proposed dividends and observed that what was proposed for the year stood at 380 million CFAs. After that, what you have left from your surplus, which is to the tune of 2.874864 CFAs, was transferred to your reserve. And coming to the statement of changes in equity for the year, that is, a transfer has entered your reserve during the year. We want to observe and see how that change was effected during the year. We want to see the changes that really occurred during the year as far as your reserve is concerned. As at 1st January 2016, you were having a reserve of 6.769 081320. That is 6 billion 769 million and 81,320 CFAs. That was what you were having. But in the course of the year, there was an adjustment made to this reserve. And the first adjustment that came into your reserve was the claim, palliative claims and dividends that were not collected by members in the past year, which you were carrying in your account. That stood at 365,870 CFAs. Having established that, you have your withdrawals, which you made during the period, and it stood at 1.829288,730. Also, a surplus for the year which we have established was brought in here to give us a total of 5,323,093,324 CFAs. Having known this movement in your revenue, we now went on to see how the transactions with you as owner of this fund, what transaction really came in from owners of this fund that can be attributed to you. There was a contribution from members which stood at 2.8 billion CFAs. And from the dividend proposed of 380 million, we now have, as at 31st December 2016, a revenue reserve of 7842,873,740. So, having known your movement in the statement of changes in equity and the performance for the year, you have been told of your assets by your president. That has been highlighted by the president. And the total fund attributable to members' equity, which I have shown you in the changes in the equity, that one stood at 7.8 billion, which to us as an auditor, we think you have a sufficient fund for the union. So having done this, we now present to you our report as your external auditor. And this report is to the members. We have audited the accompanying financial statement of ECOWAS Staff Mutual Credit Cooperative Union, which comprised the statement of financial position as at 31st December 2016, the statement of financial performance and statement of cash flow for the year then ended, and a summary of significant accounting policy, which you have in this account. Then we look at the responsibility of your executive committee as well, which is to maintain an adequate internal control procedure for all your records. And having gone through all this, keeping of proper accounting records, sustaining accounting policies, and financial statements that are prepared on going concern, with the hope that the credit union will continue to exist perpetually. So having seen this responsibility and having audited and gone through your record, we form an opinion, and here we communicate the opinion. We conducted our audit in accordance with international standards on auditing. An audit includes examination on test basis of evidence relevant to the amount and disclosure in the financial statements. It also includes an assessment of the significant estimates and judgment made by the executive in the preparation of the financial statements, and of whether the accounting policies are appropriate to the cooperative circumstance, consistently applied and adequately disclosed. We planned and performed our audit so as to obtain all the information and explanations which we consider necessary in order to provide us with sufficient evidence to give reasonable assurance that the financial statements are free from material misstatements, whether caused by fraud, error, or other irregularity. In forming our opinion, we also evaluated the overall adequacy of the presentation of information in the financial statements and assessed whether the cooperative books of account had been properly kept. Our opinion. Our opinion as your external auditor is that the assets have been properly valued The cooperative have not contravened the Union's Constitution nor Cooperative Act of Nigeria. The financial statements, which are in agreement with the Book of Accounts, give a true and fair view of the state of affairs of Mutual Fund for the year ended 31st December 2016. And the surplus so established, we have given our report that is adequate for the Union. This is our report.
Which is the unit, which you are contributing. Otherwise, the concept of share will not be clear. Are we clear? You see, in companies, no matter what you do, you say, the cost of that share is 200 CFA.
You've not
so even if you advise 10 shares, and
you need their names.
200 times 10. So 2,000.
Like
now that way, you have a value equivalent and a non-value equivalent share. Now, in that case, we're talking about another contribution. So that's why, when we did the dividend policy, that's why we set the target. We said, look, this is where we're coming from. We are looking at interest that you are paying on normal loan, because we want to reduce your budget. Let's set a target that says that if you have your funds with us, we should give you a dividend that is at least equal to what you will pay if you bought. You understand what I mean? So let me give you an example. If you have contribution of 10 million CFA, and you take a loan of 10 million CFA in a year, yeah? Now you are paying interest at the rate of 5% over a 3-year period. Is that right? Now, your dividend in that year will be 5% of 10 million. Your interest will be 5% of 10 million. So if you are where your welfare is, then you are literally getting income for the interest that you are paying. So you don't get actually more than heavily subsidized. So that's why we said the dividend policy to link up with that. Are we together? Thank you.
I noticed that the total number of contingent models are about 80% of the balance sheet. And when I read the report, I don't have some report on this important money. What I want to suggest, if the auditor can make for the next year a special report on this low quantity numbers, I'm quite sure that to be granted to follow all the rules, but I will be more comfortable if you can tell them assure that the procedure are well respected, and also there is no risk.
Thank you. So, Emmanuel, can you just run us through the Constitution and then we can move on?
What I am only going to take just basic highlights that things that are a little bit different from what it was from the original Constitution. Part of the committee's assignment was to not just to pick one or two revision, but to do a total review from the bodily arrangement to the wordings in the Constitution. So I may not necessarily be able to say this is where revision was made, but I'll just pick up the highlights. And the first highlight is the preamble. You've read through the preamble. There was no preamble in the original Constitution. So you will see the preamble. Then in the chapter 1, the applicable law, address, and objective principles. In the applicable law, in the original Constitution, the word cooperative is not there. So now, because of our registration, at the point of registration, the registrar of cooperatives in Nigeria insisted that for him to register the union, the word cooperative must be embedded in our name. So that word cooperative is part of our registration. So members of the committee thought it wise that we should now adopt it into our constitution. So the name on our constitution now is now ECOWAS Staff Mutual Credit Cooperative Union, because that's how it is in our document of registration. The address still remains, the vision still remains, strategic goals still remain. The objectives were just tinkered a bit, but they're still structurally the same thing. Then under article, in Article 3, under membership, Chapter 2, under membership, there's a little revision there. Before now, the registration fee is 20,000, was 20,000, I beg your pardon. Now, the committee is proposing a revision of that 20,000 to 50,000 CFA for membership fee. It's now placed for your ratification, please. Application for membership is still the same thing. Withdrawal of membership ab initio was not in the original documents. Now we've included the condition for withdrawal of membership. Rights of membership, it's there for your review too. Responsibilities and obligations of members of the union were not there in the original document. This has now been embedded in this. Expulsion from the union. Okay. Please, can we now move to the funds of the union? Under the funds of the union, what makes up funds of the union? These were not there in the original document. And the committee thought it wise that it's important we define it explicitly. How does the union derive its funds? And the first is, if this recommendation gets your blessing, that means every member that will be joining the union subsequently will be paying the sum of 50,000 CFA instead of the 20,000 we're paying before now. That is a way of showing that our goodwill is appreciated. So anybody who's wanting to join should see a reason to pay that amount. Your savings, but now we are putting a clause there that if you have a savings of 10 million CFA and you have a loan of 8 million CFA, you can only withdraw your savings to the extent on which your savings exceeds your loan. In simple terms, if you have a loan of 8 million and your savings is 10 million, you can only take the 2 million in between. You understand, please? Okay. And there's another caveat there, because it technically means you've withdrawn your savings and your loan is at par. There's a little caveat that at every point in time there must be a minimum of 50,000 CFA available in your savings for you to be a member. Please, let's take note of that. So you may not draw your savings totally and leave 1,000 CFA and say you are still a member. The minimum savings for you to still be a valid member is 50,000 CFA. Thank you, sir. Okay, under Article 8, ab initio, we only had normal and special loan. Now we are including the asset finance scheme. And there is another one that is not effective now. We are hoping, just like the president mentioned in his speech, in his report, walking into the future, we hope to go into this mortgage loan, but this is not operational now. We do not have the capacity to take this presently now. That's why it is written there in explicit terms. It is expected that this loan shall become effective in the future. Why I need to emphasize on this, so that a member will not come asking for mortgage loan now. Thank you very much. Eight, all permanent staff members are entitled to a maximum of 5 times of their savings as loan, but payable within a period not exceeding 3 years. All contract staff are entitled to a loan not exceeding 2 times of their savings and to be repaid within the terms of his or her contract.
You clearly will have to declare and present it to members of the AGM for approval before you can then move on and pay. On the basis of this, riding on the back of the fact that we made profit of about 382 million, also riding on the back of the fact that we have accumulated reserves of more than 100 million CFA, and considering the fact that for the year in question, we made a profit of about 382 million with a free cash of about 436 million CFA in the bank account. We do hereby present to you a proposed dividend for the year of 380 million, up from 290 million in 2015. The dividend payout as a percentage of members' contribution is about 4.95%, as against 4.35% in 2015. This represents a movement of 11.5% in terms of the dividend percentage that we are proposing. And we're presenting that to you for consideration and approval so we can go ahead and do the numbers and get the monies into your bank accounts. Thank you. Now we will move to the last but one item, and the mandate that you have given to this union by endorsing the current constitution in force. The tenure of EXCO is 2 years, renewable once. Subject to your agreement and subject to the willingness of the people who run the place for the immediate past 2 years. In consultation with my colleagues on EXCO, and based on the performance over the past 2 years, we want, number one, to represent ourselves to you for consideration for the next 2 years in line with the constitutional mandate, failing which we abide by the second leg of the constitutional provision that says we should elect new members. So these two options are there, and we are presenting it to you for your decision. Thank you, and the floor is open.
I think it is better for me to move this motion that this present executive should be returned.
Thank you very much. I think the next item that we need to move on to quickly is the raffle draw, and then we go on to closing, and then we go to the closing remarks.
So somebody was asking what's the modality. That box seated there, it's assumed that everyone's ticket is there. Just by random, the accountant will call some members of the high table, the special guests. You just come, shuffle the box, pick out one, if possible, with your eyes closed so that we'll tell you how transparent you want to be. Anybody here is a winner. Yes. That's the intention.
If by error they cast their papers there and by accident they are picked, they will not receive the item. However, so that is just one of the conditions. And we want to say again, he has said it for the optic time, that's several times, that those who are having the papers should drop them now, because as soon as we start the process, no papers will be dropped. Again, we want to invite some of us here to the podium to observe the process. You know, we want to make it as transparent as possible. And we want to invite one staff representative of the ECOWAS Commission to the podium to observe the process. If any staff rep is here from the Commission, is invited to the podium.
Commission, Court, Parliament. Okay, good.
And then, if we have anybody from the Parliament, staff representative, is equally invited to the podium as an observer. A draw is picked. And I hand over to my colleague, Blessing, for further information.
The first prize, 65 smart UHD LG TV with Lubit decoder, will go to the first winner. Yes. Then the second prize, LG